Hi, this is MeTam Television exploring United States stocks.
This video
Is being broadcast simultaneously in partnership with Mijun Television. The segment we'll be doing together today is about how I've been introducing different stock discovery methods and presenting various stocks one by one so far. Today, I thought it would be good to explain how to connect the trading signals from choice stock in the market score service, so I prepared this video for you. That's because market score has entered the greed phase. Then, in fact, we need to keep in mind a market correction, but there can still be buy signals for individual stocks. How should we interpret these? And then should we just buy everything that appears in today's trading signals? Since there seem to be a lot of questions like this, I've prepared a video on how you can practically use and interpret these signals. I hope this helps you judge and use it effectively after watching. Yes, if you look at the market score, I explained in the previous video what the current situation is like. Over the past year, it dropped from the greed stage to normal and then all the way down to fear. This day is April 8th. Now it's mid-August, so it's been about 4 months since then. After that, the market rebounded in a V-shape and stayed in the greed zone at the top for quite a while. It stayed there for about a month and a half to almost 2 months, which was quite a long period compared to the data we have. So honestly, when it started to turn down like this, I thought it might go into a correction at that point. Then with another boost, it actually reached almost 97 out of 100 points. So there was a point when it almost hit the peak. After that, as you can see, the market score has been adjusting and now it's down to 63 points. So even during this period, there were buy recommendations during the greed phase. And even in the declining phase like this, buy recommendations still come out. They appear at each stage. So when should I buy? In that regard, how should you connect individual trading signals with the market score and make your decisions? Today I want to focus on explaining this part. The first part that many people find confusing is this part right here. The market score tells us that when we enter a state of greed, we're likely to experience a correction. If you look here, after entering a greedy phase, usually within 1 to 2 months, the index tends to go through a significant correction. Sometimes it's about 10% and sometimes it can be even more than that. Even if the index goes through a 7 to 10% correction during that period, there are individual stocks that experience corrections of 20 to 30%. And then you might think, shouldn't I just not buy right now? But this is usually the period when returns are the highest. So you start to wonder if you should buy the stocks that are showing up late in the trading signals. And this can be a time when your desire to invest really heats up. So figuring out how to make a decision at that time is one of the most difficult parts. So with market score, when greed appears and in the second artificial intelligence trading signal, when a buy signal comes up for an individual stock, how you decide what to do is something you should really think about and know in advance. The second point is this, when the market score falls into fear, like I mentioned earlier, that's when you need to buy a lot of stocks. If you check the stocks in the artificial intelligence trading signals, signals show up, but not during times of very rapid movement. Signals usually appear when the market shifts from fear to anxiety, either at the start of anxiety or during the move from anxiety to normal. That's when most signals emerge. Especially the stocks that are likely to lead the rise usually appear during the anxiety stage. But when I fall into the fear stage and want to buy something, trading signals don't really appear. It's not that there are no trading signals, just none for the stocks I want to buy. If there are stocks with trading signals, you can just consider buying them. But for the stocks I want, the index rises and the stock price climbs from the bottom. Even as it goes up, people still ask, when will I get a buy signal? I'll tell you how we can judge and make use of these aspects. The first thing I compared is that greed and fear are at opposite extremes. So the question is how we interpret this by connecting it with artificial intelligence trading signals. The first is the greed phase. Buy signals that appear during the greed phase usually come at the end of an uptrend. What I mean by the end is that the stocks that are going to show signals have already shown buy signals. So even though we've entered the greed phase, buy signals still appear. In that case, it's best to view those stocks very conservatively. And they're not the market leaders because the leading stocks in the market have already given buy signals and are now in a phase where you're holding them and have already made quite a bit of profit. A buy signal indicates the market's pulse or momentum. As temperatures rise, these stocks likely receive buy signals only at the final stage when entry is unavoidable. So buy signals that appear during the greed phase don't show up for many individual stocks, but when they do, it's likely that the stock is at the end of its rise, and most of the time they're stocks that people aren't familiar with. So the investment appeal is relatively low. So generally, if you don't have the ability or time to individually analyze these stocks, it's better to skip the stocks that give buy signals during the greed phase. But if you still want to pick from these, it's really important to compare. Is this really the best stock, or could I buy more of the stocks I want if I wait for a bit of a correction? So especially since there's a possibility that the market index could experience a correction, there's also a good chance that the stock price of that company could be quite volatile in the short term. So if possible, I think it's better to avoid buy signals that come out during the greed phase, like I mentioned earlier. At this point, when the price is already rising and buy signals are appearing. Do it that way, but also pay more attention when the market is in the fear phase at the bottom. Don't try to pick stocks during the greed phase. This stage, where the fear phase leads to the normal phase, is actually the best and most comfortable time for you to buy stocks. Especially when you've entered the fear phase, the best thing to do is to buy index ETFs. For individual stocks, the trading signals can all be different. But in terms of the index, the fear phase is a time when there's a very high chance of confirming a short-term bottom. So if you buy during the fear phase, usually after 1 month, the index tends to rise by about 5 to 10%. That means the index exchange traded fund itself can go up by 5 to 10% within a month, and that's for the exchange traded fund and the 2x leveraged exchange traded fund. Buying the index now offers a strong chance for a short-term return of 10-20%. Personally, when we enter the fear stage, not the very first moment we enter it, but after entering the fear stage, there's a point where the fear score stops for the first time. The day it stops or rebounds is the best. So what I'm saying is, if you look at the chart here, you'll see that the fear stage started here. After it drops here, there's a pause, right? That pause is probably the best opportunity, because even if it drops, it can fall even further down. This is simply the chart in front of us, which is the index's
just a specific moving average line.
I'm not just talking about, since I consider valuation, trading signals, and fundamentals together, you can assume the valuation is already factored in. If the market is fearful but your desired trading signal isn't showing for the stock, it's best to buy and accumulate ETFs once confirmed. Personally, that's what I'm doing as well. So the ETFs you bought during the period of fear have already yielded a return of over 20% in just about 4 months. So if you find it difficult to pick individual stocks, then at times like this, it's best to buy index ETFs or leveraged ETFs. Next, the second point is that after confirming the market score bottom, the buy signal stocks that appear right after the bottom are stocks that come out very quickly. They rarely appear, but among these stocks, especially the ones with a large market capitalization, not the small unknown ones, if these signals appear in mid-cap or larger companies, that's the best time. Especially for growth stocks with high growth rates, if you see buy signals for stocks categorized as growth or rocket growth stocks in our market recipe, you should never miss them. When these signals appear, they usually lead to significant returns, so you should understand that the buy signals at this time are completely different in quality from the buy signals that appear during periods of greed. Next, this part answers the question I mentioned earlier about what to do when you are in the fear stage, but the trading signal is to wait and see. Even if there isn't a buy signal in this situation, you can personally make a preemptive decision based on the valuation chart. However, since there is still a high possibility of further decline, this is a section where the expected return is actually quite high. Most clear signals appear when the market shifts from fear to anxiety, with many signals emerging during the anxiety stage. But since we've entered the fear stage, I think now is the time to start buying stocks. If there are good buy signals, you buy those stocks. Suppose I want to buy a stock, but there's no trading signal yet. The market is fearful and the stock has just rebounded and is slowly rising. This is about deciding what to do in that scenario. So even though there's a possibility that the market could fall further, if you feel like you want to buy at this level, it's best to check the valuation, as I mentioned earlier. Let me explain with some examples from the website. Nvidia seems to be one of those cases. If you look at Nvidia's current trading signals, the actual buy signal appeared around this time, which I believe was May 9th. The buy signal came out on May 9th. But earlier, the point when the market index, the market score, hit the bottom, paused, and then started to rise was around April 8th. That point is right here, April 8th. At this point, I just want to buy when fear sets in, but there's no trading signal. There's this much difference because this person bought at that price, but I entered during the fear and got a lower price. This difference is about 10% to 12% in returns. If you make that much, it would really help your overall cumulative returns. So in this situation, the best chart to look at is the valuation chart I mentioned earlier. If you click on the valuation chart, here after the stock price dropped continuously, it hit the bottom on April 4th. Then it surged and formed a double bottom between April and April 20th. If you look at the valuation, it's right here. At this point, both the trading signal and market score showed complete fear. Before, Nvidia was too expensive, but when fear hit, its valuation also bottomed out. But Nvidia hasn't given a trading signal yet. What should you do when the buy signal appears? I wanted to buy Nvidia, so by checking this valuation chart, I could personally buy it ahead of others. So the solution we provide can't be 100% accurate, and we can't guide you on the perfect timing for every stock. So you can use this as a reference to see if there are issues like this, if a good buy signal has appeared, or if there are problems with the supply and demand and a sell signal has come up. I think it would be good for you to make full use of the data for these purposes. If you know Nvidia well and think it's worth buying at this valuation, you can buy it at this price individually. But there's also a possibility that it could drop further from here. So what we call a trading signal doesn't come at the very bottom where there's still a chance it could fall further. Instead, the buy signal comes after it's been confirmed that the trend has shifted upward out of the tunnel. So compared to the absolute bottom, the price might have already gone up about 10%, but the artificial intelligence trading signal is given after eliminating the risk of further decline. If you personally judge that you can just buy at that point, I think you can definitely buy here as well. That's a matter of individual ability, and the cheaper you buy, the higher your returns will be. But you also have to take responsibility for the possibility of further declines, so I think it's best for individuals to make their own judgments about those parts. Now the stock price has gone up, so if you look here, it's currently in an overvalued state, but the signal itself is still a hold signal. If you look here, you can see when the signal came out, it was at $117 on May 9th. So right now, the return is about 56%. But if you had bought it earlier on April 7th, based on the valuation, instead of 56%, you probably would have gotten a return closer to 70%. That's because the expected return is high, and on the other hand, the risk of it going down is low. If you aren't familiar, you might wonder, why isn't there a trading signal even though the stock price is rising slightly? But that's because the signal only appears when it's really clear. So if you understand that difference and use it, I think it'll be helpful. So you can use it like that personally. Next, moving on, I'll briefly explain the overbought stage. The judgment changes a bit depending on how the overbought stage moves. Sometimes a trading signal emerges as we move from lower stages like fear or anxiety to normal, then overbought. In these situations, there's no issue. That's because the stocks that first give buy signals usually have strong upward momentum and are growth stocks, and then the mid-level ones start to appear as well. The timing when these appear is often during the normal or early overbought stage. That in itself isn't a problem, so in an upward trend there's no particular issue. On the other hand, when the market turns from greed and starts moving down into overbought territory, like right now when it goes from greed to overbought, at this stage, even if a buy signal appears, rather than making a hasty purchase, you should keep in mind that the index itself might go through a correction, and individual stocks are likely to follow that movement as well. So it would be best to use charts to check the timing of those aspects and make your final decision. In our trading signals, we notify you if the signal has turned or if it's time to cut your losses. So it's best to just follow those signals. If you try to hold on just because there was a recent buy signal, even though a sell signal has already appeared, there's a high chance that this approach will be wrong. So whether it's on my broadcast or elsewhere, I introduce and discover stocks for you. For confirmation, it's best to check the trading signals. Usually, even if we buy when it's undervalued without a signal, we end up cutting losses quickly. So, I think it would be best if premium members make sure to check those trading signals themselves. Next is the anxiety stage, which is an ideal time to keep risk low while significantly boosting your expected return. If you invest during the fear stage, the expected return is even higher, but you should consider that the risk is also a bit greater in that section. Your personal judgments about those parts should be based on the valuations I mentioned earlier and the growth stocks that I check for you every day. We need the diagnosis score, supply and demand, exponential moving average chart, and valuation to align. When you're afraid everything is actually fine, the diagnosis scores are all in the 90s and the valuation is at its lowest, so both have passed. Supply and demand aren't matching now, and the exponential moving average chart and indicators haven't turned, so there is no signal. Even if both align, it's hard to predict when supply and demand will change. If you choose to start buying now, you can buy in the fear zone without waiting for a buy signal. That's the summary. Buy signals start appearing in large numbers from the fear to anxiety phase, especially during the anxiety phase. Currently, fundamentals and valuations align, and as supply demand improves, many buy signals emerge. These cases have low risk at the beginning, and these are buy signals with a very high probability of going up and a high chance of success. So since these are the best buy signals to make a profit, it's best not to miss these buy signals at this time. And once your purchase goes well and you start making a profit, it's best to just hold on until it turns into a sell signal. Instead of thinking, I've made a little profit, so I'll sell quickly and buy new buy signals, it's better to just hold on to the stocks with buy signals in your portfolio until the end. If you're an individual investor, it's best to manage your portfolio by holding about 7 to 10 stocks. So instead of thinking, I got NVIDIA, so I'll put 100% into NVIDIA, there are actually many stocks that can yield much higher returns than NVIDIA. And that's why it's best to divide your investments among about 7 to 10 stocks and then sell them when a sell signal appears. Some growth stocks, like NVIDIA, previously lacked buy signals due to high valuations. Now in this uncertain phase, they're starting to show buy signals. So at this time, it's very important not to miss out and to make sure you buy. That's what I can tell you. Next, I'm going to move to our website and talk about a few examples related to this. And finally, I'll mention some cases where a hold signal has appeared. I've already looked at it and I'm really interested in this information, but it's a hold signal, not a buy signal right now. So is it okay to buy at this time? There are quite a few questions like that. I'll answer those as well. First, I'll review some sample cases and then provide the answers. Let's go to the website and look at the samples and screens together. Most of the stocks hit their lows around early May, around May 9th. The market score actually bottomed out on April 8th, and the stocks that can be considered leading stocks generated a large number of trading signals on May 9th. There was a 1-month gap, so buying on April 8th would have been better. However, with possible further price drops, no signal was given. May 8th means that a huge number of stocks started to meet all three conditions from that point on. So I want to emphasize that the most important thing is not to miss that timing. For example, let me tell you about some stocks that appeared a bit earlier. In the case of Netflix, if you look here at the chart for about 6 months, the date I mentioned earlier, April 8th is this point right here, right? This one hit the bottom on the market score and then went up, and this is the stock price movement. The first buy signal came out on April 14th, so it came out pretty quickly. If you look here, the score shows the bottom was here, but the buy signal appeared here, so the gap is really short. If you look here, buying and selling repeated a bit, and at that time it was a really good company with a good valuation.
It's cheap, and the supply and demand are also good.
Signs of a turnaround triggered a buy signal. But if it didn't seem right again, since the market was in a complete panic at that time, I sold again, and now as the returns are coming out like this, I'm holding on to it in this way. Even at this point, if you look at the valuation, if you look at it in April, the valuation was overvalued, then it became undervalued again, then overvalued again, and now it's back in the undervalued range. Even though the price has gone up, the reason it's still considered undervalued is because the company's valuation itself is rising. So this pattern keeps repeating. Just because the price has gone up, it doesn't necessarily mean it's expensive. It's best to just hold on to it until a sell signal appears. Corrections can happen, but that's just part of it. When a sell signal does come, it's usually a bit lower than the peak, so it's not the best if you sell at the very top. But you can't really know that, because what seems like the peak could actually be the bottom, and it could become a new peak again, since the price can keep reaching new highs. This trading signal is a model that locks in profits when you think it's definitely turned around. When you look at many companies over the long term, just holding on to them at expensive prices using this signal, even if they're expensive, is much more likely to give you better returns. For Netpulixu, the fear period arrived quickly. So this is the kind of concept where you can make your first purchase, and if you look at the other stocks, like Nvidia, the timing I mentioned earlier was May 9th. But if you want to buy at the point of fear, I told you to look at the valuation chart. If you look at the 6-month chart, even with Google, you can see that the trend turned down and there was a sell signal, but then a buy signal appeared at this point. It was pinpointed on May 9th. Realistically, the parts we can call the bottom are the part we can call the bottom, if you look at the index, is May 9th, so you could say it's actually much earlier. This one around some day in April, maybe around this time, this was the point when, according to the market score, fear peaked. At that time there was no buy signal from individual information, and then Google's buy timing came out around here. It was released then and has been held since, now yielding about 31%, which is much higher than the index. Next, let's look at stocks that have risen a lot besides Google. For example, shall we take a look at advanced micro devices? If you look at advanced micro devices, it's May 6th here for advanced micro devices, May 6th, 7th, 8th and 9th. At this point, what we generally call the top market cap stocks, the stocks that have been leading the market, start to show a huge number of buy signal reversals. So at this point, if you look at this one as well, just by looking at the chart here, the first buy signal appeared here on the chart, so it was a good stock with a cheap valuation, but it was one of those stocks where the price just kept falling. For the first time, it turned and gave a signal, but then as it started to fall again, it showed that this wasn't the one, so it gave a sell signal. And then on April 7th, the market score hit the bottom at this point, right here. So it's obviously cheaper than when the buy signal appeared. It's definitely a lower point, but there's still a possibility that it could go even lower from here down to the bottom. The trading signal means you move on, even if the company is good and valuation isn't an issue. If you want to buy now, check the valuation chart to see if it's at the bottom. Consider a long-term perspective when deciding. It's a personal choice. Decide based on your trading or investment style. In the case of advanced micro devices, even at the time when an actual buy signal appeared here, there were actually a lot of concerns in the news. There were many worries about advanced micro devices, but despite that, the stock price kept rising, and eventually the negative news disappeared. This is one of those cases. At this point, a buy signal appeared, and now it's gone up this much.
But this,
as you can see at the top, the current return is about 73%. So just because there are no trading signals when entering a state of fear and you don't buy, it doesn't mean you won't make a profit. So even if it goes up, for example, from the anxiety stage to the normal stage, if a signal for advanced micro devices or another leading stock appears, it's not too late to buy at that time. So even if you're in fear or have just come out of fear and you're wondering why the stocks you own or the ones you consider leading stocks aren't giving trading signals, don't worry. Once confirmed signals will appear and buying early still offers enough profit. That's how you should view it. I only checked advanced micro devices due to time constraints, but if you look up companies like Microsoft or Meta, you'll see that signals appeared on almost the same dates, and after that, most of them have shown returns of about 30% to 70%. So, if you try to buy new stocks at this point, which is the stage of greed or excessive desire, you won't see buy signals for those kinds of stocks. The signals won't appear anymore for those. Instead, you'll see buy signals for stocks that are less well known or have a small market cap. Since those signals come out by squeezing such stocks, it's actually better to avoid the ones that appear at that time. But most people want to buy at that time because the index is rising a lot and stocks are going up. So you don't have any stocks right now and you want to buy something. So you end up jumping on those buy signal stocks. But actually these cycles keep repeating. If you look at our initial screen, there's something called market score. It's updated daily, so check it. And if you click here and go in, you'll see it at the bottom. Even just in the past year, we've been swinging back and forth between fear and greed. That means this has been moving about once every 6 months. Greed appears likely to persist, but we're in the overbought phase after a correction. If we don't rebound soon, further correction and decline are possible. Make your decision when the time comes. We should buy heavily at the market bottom during the fear stage. If major stocks like Netflix emerge, buy them. Good chances for most stocks are rare. As more opportunities arise and the fear stage ends, consider buying individual stocks. Then check if the fundamental score passes, then see if the valuation is cheap enough, and look at the stock price chart to see if it's showing an upward trend. If so, you can personally decide to make a trade. The best thing is that they are the first stocks to buy that come out during this uncertain phase when things start to go up. Most stocks I mentioned earlier, Nvidia, Google, Meta, Microsoft, advanced micro devices, emerge at this stage. I think not missing the signals at this time is one of the best ways to invest in United States stocks. So instead of investing now, I believe investing during market moves like this could multiply returns. So if you use it like this, you can resolve the points where the market score and the artificial intelligence trading signals are a bit different. For example, when there's fear but no signal yet, or when there's greed but it's a buy signal and you're not sure how to judge it, I think it would be helpful to connect and look at those points together. And then lastly, when I pressed it, I searched and a holding signal came up. This is about what to do in that situation. So, for example, shall we take a look at a stock we've searched for recently? What could there be? Recently, the stock price has gone up a lot. A company whose stock price has risen a lot. This company went up so much, and after that broadcast, it went up a lot. Earlier, there wasn't a signal for this one, but if you look at it like this, as I mentioned when I picked it as a top pick on Median TV, Astrolabs' fair stock price will likely soar once their earnings come in. I think it could go up nearly 1 or 2 times. So even if the current stock price is around $95 at this point, I think it will be considered undervalued later on. That's what I said, and here's the basis. If you look here on the right, you can see on this chart that the fair stock price has shot up. When the earnings come in and those results are reflected, I knew how this would change. So the fair stock price will be marked here. This is the fair stock price and fair value. Then this $90, $95 level may seem overvalued right now, but if the stock price doesn't go up, it will be considered very undervalued. That's why I said I think it will be okay. But actually, before the earnings announcement, the stock price had already gone up 1 step. And after the earnings announcement, it went up a 2nd step. Now, if you look here, the fair value is about $133, but before, it was much lower. And when we were broadcasting, it was around $95, so I said it would go up like this, so it could be considered cheap or undervalued. The stock price is going up too much right now. It's in this state now, but if there's a period of adjustment, I think it could come back into this valuation band. Lastly, when it comes to holding valuation stocks, let me take a look at one of the popular stocks. Not many new ones lately. Should we check Apple? I think it came out recently. Apple has had a lot of concerns and has been one of the more challenging stocks among the ones people watch. If you look here, even for Apple over the past 6 months, you can see that buy and sell signals keep coming up repeatedly. It means it's a good but inexpensive company. But since the supply and demand didn't turn around and reflect properly, if it didn't work out, people would just cut their losses, and this pattern kept repeating. If you look here, when you look at the valuation, right now, after being overvalued, it dropped down to a fair price around here. And that point was in April, so it was traded really cheaply then. And at this point, again, it's being traded cheaply now. Right now, the stock price is in a rising phase like this. And the valuation, the company's value, is also going up step by step like this. It's at a point where it's rising. Yesterday, I got interested and thought, I want to buy Apple. So I searched for it. Now it's already in my holdings, and the signal showed up on August 7th at $213. Right now, the stock return is 7%. Should I buy it? What should I do? These are common concerns. In that case, although this isn't an absolute tip, if I were to give you one piece of advice, first, if the buy signal appeared less than a month ago, that's fine, 1 month. The second is an and condition. And when the rate of increase, the return is still in the single digits. So, for example, if a buy signal appears and it's only been about 3 days, but the return has already surpassed 20%, then it's better not to chase after it. If it's listed as a holding, for example, if the signal appeared within the past month and the recent return is less than 10% in the single digits, then it's okay. You might ask, isn't it even better if it's negative? Personally, I prefer it to be positive rather than negative. So let's say a buy signal appeared and you found one that's at -5% and 2 holdings that are at +5%. Then which one would you choose between the two? You might think if it's -5%, maybe it could go up even more. Based on probability, I'd invest in the one at +5%, because when a buy signal comes out, it's because it's expected to go on an upward trend due to good supply and demand. But if it's showing a minus, it means there's a possibility that the trend might be wrong. So since the one that's in the plus is much more likely to have given the correct signal, rather than thinking I should just keep buying the ones that are in the minus. Rather, if it's been a month and it's up about 3% or 5%, that's the kind of thing you want. The shorter the period, the better. It's been about a week and it's already up about 5 to 7%. Those companies like Apple right now, even if you just hold them or decide to buy more, it's not a bad decision. But if you look here, it was inside this box and then it broke out. Before the breakout, there was a buy signal. And it would be better if it keeps going up, but if it drops again here, there will probably be a sell signal telling us to cut our losses. Then you just have to follow it. Even if you have to buy again later, you just leave it up to the market to decide how far it will fall or rise, and you just catch that turning point. So it would be good if you could refer to these trading signals a bit more carefully. When you set your watch list while using Edgar Flash and Apple News, it turns red like this. Since it's earnings season right now, whenever an earnings article comes out, we send all the breaking news about it directly to you as alerts. So if you invested in a stock or are planning to and you're wondering when the earnings will be released, everything is translated into Korean and posted on Edgar Eyes, usually within a minute. And we also analyze the impact on the company's stock price and provide all that information to you. If you refer to those, you need to install the app and enable push notifications to receive them. If you check the news section, you'll see that earnings reports kept coming out all night yesterday. For example, things like CA's first quarter operating profit is up 23% more. All of these are breaking news about earnings. So when the articles come out, we analyze how they might affect the stock price, provide a 3-line summary for those who are busy, and include all the analysis articles at the bottom. So you don't have to struggle with electronic data gathering, analysis, and retrieval in English. You can just read the analysis articles right away. If you set your watch list and make use of these features, I think it will be very helpful for you. I hope today's session was helpful for you. It would be good for you to know that there's no perfect solution. Not only Twister, but we also introduce things like Seeking Alpha through Mijun Television. There will be tools that suit you best, and it's important to know when to use each tool most effectively. If you organize those things, I hope these solutions can be of some help when you make your final investment decisions. If you found this video helpful, please subscribe, like, and leave a supportive comment. Thank you.